check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul and Coach Robert? How are we doing today, guys?
Hear you loud and clear, Coach Jay.
Loud and clear here too.
Coach Robert.
Yeah.
Welcome. Looks like you guys sound good to me. Let's get a confirmation in the chat. Green Machine, thank you. Audio, video, okay. Loud and clear. We're good to go. Welcome to At the Buzzer, our market recap. Today's Thursday, right?
All day.
Feel like we kind of lose track of the days. But happy Thursday, everyone. Welcome to all of our buzzer beaters. Welcome to At the Buzzer, our market recap. If this is your first time here, I'm Coach Jay. On the far right, we have Coach Paul, and right in the middle of us, we have our Thursday guest, Coach Robert. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay, been a Topstep performance coach since June of 2023. I've been trading for the past 13 years in the futures markets for the past 6. Coach Paul, go ahead and introduce yourself, and then Coach Robert, you can introduce yourself as well.
Hey, I'm Coach Paul. I've been with Topstep since May of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experiences and some knowledge and hopefully assist you into becoming a better trader. On to you, Coach Robert.
Yeah, I'm Coach Robert. You've seen me a lot on TopstepTV. I do work for Topstep. 2017, I started trading, became professional, actually professional, a full-time job. And in 2017, began 2018, switching to futures. And a few years later, it was picked up by Topstep. And here we are, looking forward to all of what we have going on. I was employee number like 37 and it's like 200 now. It's crazy. Yeah.
That's pretty crazy. Crazy. Let's get into these markets. There was some planned news out today. We did have initial jobless claims come in at 223,000. Forecast was 220,000, so a little bit over expectations. Outside of that, that was the planned news, but we do also have the World Economic Forum going on right now, so we know there are going to be a ton of speakers out, and if you saw any of the volatility today, and we've been talking about it since we changed administration, anytime there is a headline or a comment, there is the potential for volatility. We've seen it across a couple different markets today. With a change of administration, there's going to be effects in a couple of different industries, whether that be energy, technology, crypto, whatever it is. These comments are going to affect the markets, and that's exactly what we saw. We say it all the time. As traders, we embrace volatility, but hopefully on days like this, you are managing your risk, trading with a stop, identifying where you're wrong on a trade, but you can still lean on the technicals, and we'll get into that a little bit when we look at the charts. We also had crude inventories out today, a complete miss like it always is, but what is new there? Anything else on the news that you guys have been looking at, Coach Paul or Coach Robert?
Not me. I really wasn't watching.
Yep.
Coach Robert, how about you?
No, well, I saw the news that was going on, but as far as trading goes, we really can't trade during the day while we're working unless we're on air, and then we trade our live accounts. But a lot of news going on, Jay. You hit the nail right on the head there. And regardless of one of the things that say this when they're talking politics is you don't necessarily talk politics, you talk how the politics affect the market, right? Whether you like the president or not, the prime minister or not, the sheik or not is irrelevant whether you like them. It's how it interprets into the market. That's what we all need to take into consideration. That's what we all look for. And, that said, we know when Trump is in office last time, he makes a tweet and it moves the market. But so does Elon Musk, right? And so do a few others. So we take that into consideration.
100%.
Yeah.
Go ahead, Coach.
As we were talking last week or earlier this week, boy, they're all just melding into one. It all goes back to managing your risk. If you have a position on, put a stop in. You never know when the random headline event or a tweet comes out. And, sometimes it goes for you. But if it goes against you and you're not protected, it blows up accounts. So protect yourself. Put in a stop when you put the order in.
Protect your neck. All right, let's get into the markets. There are 35 different markets we can trade with Topstep accounts, not just the equity markets. We like to focus on some of the biggest percentage movers out there. Today, to the downside, we had the ultra bonds down 0.92%. We had crude oil down 1.64%. We had comments from President Trump saying he was going to ask OPEC to lower the prices. You don't know until you ask. And then then we have silver down 1.83% for our biggest percentage mover to the downside. To the upside, we had the Dow up 0.85%. Corn, again, shout out to you, Coach Paul, for calling out corn at the end of 2024. It's been up 10% since then. Corn up 1.03%. And we have soybean oil, our biggest percentage mover to the upside at 1.33%. To talk about our big four, we already mentioned crude oil down 1.62%. We have gold down 0.35%. The NASDAQ up 0.06%, pretty much flat. If you look at the price action today, that's a pretty crazy day. And then we had the S&Ps up 0.44% to round out our big four. I have a NASDAQ chart up here. We had some trades in the house account, and then Coach Robert, I want to throw it over to you, and we can look at your charts, and you can tell us exactly what you saw from your perspective. But we have a 30-minute chart up here. Here's last night's open, and with the NASDAQ ending up pretty much flat on the day, there was a ton of movement. Initially to the downside, we can see that 30-minute opening range from last night. We had a pretty nice sell-off. It took a little while to get going. We can see that this red line here, there's a couple of red lines, so I'll tell you exactly which one I'm looking at. But this red line here, anchored VWAP from the Globex session open, wasn't the most urgent trade, right? It took a little while to get going. Right before the London session, we started to see some of that move to the downside. About a 2-hour sell-off into a consolidation, and we pretty much just retraced that entire move through the New York session. Nice two-sided trade. You might not have been trading all day, but ton of opportunity in these markets. Not the small ranges that we've been seeing. 170 points from high to low is a pretty nice range to trade. But the beginning of the New York session over the last, we'll call it this week so far, that first hour has been a chop fest. We saw it on fast markets today. The guys, I don't even think there was a trade placed on fast markets today. Coach Robert, I know you say it all the time, right? That first half an hour of trade, probably not the highest probability. It was choppy. Eventually the markets got going. There's the same way we talk about, being hesitant about placing trades when there's headlines, the market agrees, right? So until some of these headlines come out throughout the session, we'll see that choppy price action, and then we'll go from there. I'm going to throw it to Coach Paul real quick. Coach Paul, what are you seeing in the equities? And then Coach Robert, I'm going to switch over to your charts so we can take a look there.
Oh yeah, the two-way trade overnight was bought by value after yesterday's rally. Longer term, what we're usually in the equities is a bull market, and my feeling is it took patience to buy today.
Yeah, it did.
I don't know. It's earnings season. Was there earnings out today?
Texas Instruments came out.
For
all of our math geeks out there. I think I had a TI 83 in high school.
I still have one. I was telling Coach Jay, I was unloading some old stuff, and I'm like, oh wow! Someone told me it's worth some money. Yeah, go figure, right?
Right.
Literally. How about you, Robert? Did you have a Texas Instrument calculator in high school or college?
I did. I had the TI. I want to say it was a TI 86. The thing is the cartridge in the front, and then later on we get the speech synthesizer on the side. You could actually program in BASIC, and that's literally when I first started doing that stuff. I was probably 11 years old when I cracked the case on my first computer, and that was it.
Yeah, I remember at one point everyone just hacked the calculators and we're playing games on them instead of actually doing schoolwork.
Yeah,
C's get degrees.
So they still, I didn't even, I'm just literally kind of stunned that they're still in business. So I don't know what they do, but their earnings, I guess, were good. So anyway, both markets, equities, slowing down. And what I mean by that, the average true range ATR is starting to come in sync, which goes in line with volatility, which is a bullish thing for equities. As equities rally, volatility goes down there because they're expected to go up. So it still looks very bullish, but it's not easy. You need to be patient, execute your plan. That's why I turn off the news. I'll watch Topstep TV, but the news itself can sway, at least for me, can sway my decision making. Like, oh,
Yep.
I shouldn't be doing this. Whatever. As a trader, have a plan, execute the plan, and try to eliminate as much noise as possible.
Awesome. So, Coach Robert, I'm going to switch over to your charts. The last time we had you on, we talked a little bit about what your plan was, and we mentioned maybe not holding on to trades for a long time, where some of that news anxiety maybe doesn't exist, or you can mitigate it by not being exposed to the markets for as long. So, I'm going to switch over to your charts. Tell us what you may have been seeing on your charts today. I know the last time we spoke, we had a lot of interest in your strategy. So. See, we got a 1,000 tick chart up here. Your charts are up, and we can go right through them.
All right, there we go. Nice little fade on there. Love that feature. You get
Need some music behind it.
Okay. Yeah. Okay. Yeah. So I really like range charts, range bar charts, and I actually did. I'll show you that in a second. But I did load up my trading view to show a range bar chart. They're just
Okay.
not on Topstep X yet, and since we're using Topstep X for the VIP, I'm going to make sure I stay there. But I do want to explain the concept of those because somebody may be using trading view or Ninja or Quantile or something that has range bars. And they can look at it and be like, oh, here's my trade, and then enter it on their Topstep X. I want to make sure we'll go through the whole thing. Once the VIP team is selected, starting next week on the 27th, there'll be 2 teams selected every single day, 50 per team, 10 coaches. It's going to be a blast. So I'll go through everything in detail. I started writing up the whole process step by step in a document with screenshots and everything else. It's got to be like 6 pages now. Don't let that scare you. Wow. It's very simple. I just like to explain things. Like if somebody says a pivot point. Well, we can see a pivot point. I'm going to circle one, and it says right here. I'm going to zoom in on it, Chase, so you don't have to worry about it. And somebody says, hey, I want to, let's talk about a pivot point. Well, that may mean something to one person and something different to another. I'm going to circle 2 pivot points. Here we go. All right. Now, what is a pivot point? In my opinion, it's a series of 5 candles. And those 5 candles we have, let's do it down. We have 1, 2, 3, 4, and 5. I'll make that a little bigger. You should be able to see that. Perfect. So I have a series of 5 candles. This would be a couple higher highs and then lower highs. And then this level would become the pivot in this particular scenario. Okay. So now what do we do? Well, we do have wicks on candles when we're using time charts and when we're using tick charts. So there are 2 pivots I circled because they're the same thing. I have 2 higher highs coming up, and I have 2 lower lows going down. But look at the asymmetricness of this one. If I drew a line, Jay and Paul, on this, and I said I'm going to go from the high to the high to the high, and then the next high down, look how messed up that is. Whereas look at this one, 1, 2, 3, 4, 5. Isn't that beautiful? So we would be using the pivot here on the right, almost foregoing the one on the left. And the second reason is we have a high wick, an upward candle with a long down wick. That means it just came down and pushed back up again.
Yeah.
And then the next one is down, but we don't have much wick movement in there. This one is a little bit strange. This is like a one-off from me where I have a high wick. It did break over the high. I would have loved to have seen this black candle. If this chart, black is down, white is up. I don't like to use the reds and greens because when you're in a position, it shows red and green in the chart. And I don't like to have the red in your face of something bad. Other than down here, it just shows it's going down.
I try to remove red off my charts, off of my platforms as much as possible.
Exactly,
I cannot stand that color.
Yep. So we would take a look at the pivots and we say, okay, well, I have a pivot at the top here and I have a pivot on the bottom here. Now, what does that mean? Let me remove all the drawings from my chart and make it nice and clear. So we have a pivot at the top, we have a pivot at the bottom. Well, what does that mean? Well, I'm not going to buy the breakout of this pivot because I want it to have some, like, let's say, conviction, so to speak. I want it to go through and actually make something. I'm going to wait for the market to come up and pull back a little bit. And now I'm going to play the breakout here to here. And this is a calculated move. I'm going to give you the formula for this here to my team. And we're going to do the math on this, how these candles all fit together. And it will tell you what this range is going to be at the top. Now, meaning, see, we're just going to go at the top here. And that would be our quote unquote zone. The second one would be here. We can down, right? We're going to use this pivot for the bottom side. Now, we said the pivot, we're not going to take the break of it because look at what happened. We can see that straight away. What happened? We would have gotten wicked out right here. And I'm talking this, I know I'm speaking hindsight, Jay, but this is exactly how the trades would play out anyway. And I'm going to show you why we do that. Because we can go back and say, let's put our pivots on 2 levels. Where would the trade be? And that's not a guess like I would have done that. It's just this is the trade. And this is what makes my style just a little bit different. We talk about emotions and subjectiveness and stuff like that and discretionary. Well, like, hey, I measured this move. It matches the criteria. This is my trade, which is why with this setup, you can actually go back in hindsight and see what would have won and what wouldn't have for the most part. Yeah, there's going to be slippage and stuff like that. Something won't get filled. I get it. I understand it. But for the most part, we're not going to look back and say, well, if this crossed here, then that did that. It's like, no, hold on a second. This is literally what we do for our trades. We look at our pivots, and I'll pass it back to you here in a minute, Jay.
Yep.
Here's our pivot up and down. Here's our low. We're not going to go below this low. We have a math formula we're going to put in there to figure out how far below this low. And I can tell you almost with conviction, it's about here.
Okay. So you're giving it a little bit of room so you don't get caught up in some of those false breakouts. What I really like about
100%.
this is it's based on, I know you look at volume profile as well, but it's based on areas that the market has shown that it turns around, right? Where the market had to make a decision, right? We have that low pivot, that high pivot. The market has to make a decision. If it breaks through it, there was hesitation there for a reason. And again, you're not looking for a 100-point move out of it. But if we make a different decision than what we made the last time, then I want to take 10 points from there.
Absolutely. Roughly 10 points, and that's calculated. It's going to be between 5 and 15, but the average is going to be between 8 and 10. And I want to make sure when just blowing smoke here, I want to show that there's losers, because this here is a losing trade. So we have a pivot coming down and up and down, right here. Okay, so we have a bottom and a top. That means we know this criteria. We know our measurements. We know our candles, so we can plot it out. This is a very easy one. And I can just eyeball these now because I know the formula. I know where it's going to be. And we can see this is clearly a winning trade. Now we have a down pivot and we have an up pivot. Well, we're going to break this one. There's a winning trade. Then we have a down and up. We have another one here. But what did it do? It entered and lost. So I have to show the losers with the winners. We're not going to say anything different.
Wait, hold on a second. You lose trades?
Yeah, but don't tell anybody. Don't tell anybody. And you play them on the downside too, Jay. We have a down and up pivot, so it will be below this level here, and that actually worked out pretty good as well. This one was a loser. We have to show it. This pivot came down and up. This trade right here is an entry, and this would be a losing trade. So we have to put those in there as well. This would be roughly here. Again, I can put this. I have a calculator for it. We're going to give out. This is a losing trade. On this one here, I can tell you that's a loser, but this one was a winner. And I'm just marking these up off the top of my head. Here, roughly up a little bit. There we go. The next one here, roughly up a little bit. There we go. Okay, so what we're doing is we're just taking these little tiny pieces. Here's a loser. I want to make sure we mark this off. Here's a loser too.
Okay. So in this case, I know what we talked about a little bit before was that the strategy that you're trading is probably pretty high win rate, and the losing trades are going to be a little bit bigger. In this case, some of these trades you might be going in with a 30-point stop. When you see the market to kind of turn around, are you cutting the trade from there?
Yes, sir.
So they're losers, but they're going to be smaller than that disaster stop that you put out there.
Exactly. We want to keep
Makes
it away
sense.
because how many times has the, especially NQ, just dropped down 10, 15, 20, 30 points, went right back up again for some
Right.
unknown reason. If there's no news out there, just something happened, liquidity formed. We don't know. And that's all we can do is we can only manage what we're in. Sometimes it goes down. So I have to have a little bit more room for this particular style. Now you'll see that in the candles, especially when we switch over to range bars. You'll see the market will drop down and right back up again. And your stop is 30 points away, 20 points away. And I may have, as an example, 3 trades with a calculated profit is 10 points on each trade. One stop is 12, one's 16, one's 21. It's just how the math works out, and it's how the
Got you.
market works out, how far and fast we're going. You can really see
And
that.
that math, that's the Coach Robert sauce, right? There's
That's it. There's a couple of pieces of criteria that go in there. It's very simple once you have it. I have it documented up here. But we look at some of the things too. Like I only have like really 2 small rules, Jay. We're not going to trade the 30 minutes of the US Open, period. Bar none. History off my team. That's how it goes. Sorry. The other one is that we don't trade around the point of control. So if our market is trading around the point of control at the time, because we know it morphs as the day goes on. We see crisscrossing over it. We're just going to be like, that zone kind of picked up somewhere in that area. We're not going to take it. And the irony being, if we look at the trades that lost, 2 of the losing trades are at the current point of control, which is pretty interesting. But we're going to take them anyway. We're show the losers with the winners.
Coach Robert, can you define the point of control for our audience who aren't familiar with it?
Sure. I'm going to move this over so we can see a little bit more of it. Here's volume profile on the right-hand side. Point of control, POC, commonly known, is the area where the most contracts have traded, the level, and this is roughly 22,036. But this is called the visible range volume profile. So as I move the market over, now watch the right-hand side, all I'm gonna do is drag the chart over and it'll recalculate. We can see how it builds. See the point of control is down here now because it's only calculating what it sees in the chart. Here's our point of control. This is where the most contracts were traded based on what we see on the chart that the volume profile is covering. And here we can clearly see we have a whole bunch of consolidation here. This is where the markets have mostly been covered. And Jay and Paul, I know you guys like to use this as well, but here's what we use. I'm gonna remove my drawings so we can start fresh. We see our high at this point in time. This is 12:30 Central.
Okay.
We didn't reach high again. Our point of control is down here. Okay. And now we're looking at this as a potential breakout. Okay. Well, prior to this happening, prior to these candles up top, I'm going to move this off the chart. What did our point of control look like? Not much. This is the day. This is from the morning. So we have a high, we have a break, we have most of the volatility down here. We have a little bit of remnants up the top. So what does that mean to me? To me, if we break over these highs and we don't have a lot of activity going on, we should, quote unquote, move pretty quick through this particular area where this low volume is. Same thing for this volume gap and the same thing for this right here. Now, yes, it does change as the day goes on because as we add more and more criteria, more and more data to it, it's still going to see. We can see that this is the high point. The blue is that it's 80% of all the contracts. We have this is a low volume here. We have trading going on up here. We have trading at this level before. We can see it all the way across. There's just not much of it. Why?
Right.
This is the overnight. In the end of the day yesterday, the overnight last night, not much volume. So my speculation, right, assumptions, my guesswork is that if we break over these highs that I was talking about, we should go through this area pretty quickly. And Jay, if you recall, you saw that in the chat as well. It was 21,942.
Yep.
And actually, that's exactly where Dakota had gotten in the trade, like just previous to that. This is where we had marked it out. Okay, there's 942. We need to break through this low volume area. And then once we break over the high, we were holding up to 22,000. And guess what?
Nice.
It actually through there. Yep. So that was a good call.
Yeah.
So was that way, but it was.
Go ahead, Coach Paul.
So on those highs there on the right, is that a pivot up there?
Let's see. Yeah.
No,
it's not. It's a close. I'm going to zoom in so we can see it. I have 1, 2. I have higher highs, 1, 2, 3, making higher highs. I have a lower high, but then I have a break of it. So I want to see 1, 2, 3, 4, 5. This is what I want to see. And this one actually went 1, 2, 3, lower, and the fifth one went higher.
So because it's not clean, you're not going to consider
Correct.
that one?
I would not
Okay.
like to use that as a pivot. Now, again, this is where your speculation and not speculation,
Discretion.
our discretion comes in. Where are we at? It's at 3 o'clock Central Time. Market's closing. Nothing is happening. Volume is low. Could this just be the last cleaning those wicks out, cleaning those orders out up top? People that were shorting the market, they short the market, they break over the high for stop, over the high for stop, and then they go over the high for stop, and that was just taken out. It's very possible. But here's the kicker, Jay, and it's a great question, is we're not going to use this data. You know why? It doesn't matter to the next day. This is
Gotcha.
how we would say the US market. So we're not going to use data from the Asian market to trade London or data from the London market to trade the US. One of the reasons why we don't like trading the US Open, we don't have enough information yet. It's entirely different.
Gotcha.
We have a
put that on a
question
range.
here.
We'll go back and forth. We'll put that on a range bar chart, and I'll show you some real magic.
Got a question for you here. Go ahead, Coach.
Oh, you got it. From Billy?
Yeah, one from Billy here. Once you find the initial pivots, do you set your orders and walk away? Is there no worry about a time stop here? So I know for you, Coach Robert, you have some of that automated in certain platforms, but if someone was trading that manually, would they set an order above that pivot and just let the market take it out?
The answer is 85% yes, because
Okay.
these are preset, preconditioned, but one of the following steps is we're going to look at the bottom down here, and this is our DI plus and minus. It's a directional index, and
Okay.
ADX is the yellow line. So let's pretend that I have an order. Let's pretend that I have an order pending right here.
Okay.
I have a buy stop with my target and a stop loss below. And our stop loss, and I'll draw it on here. Long position. Here's my entry. Here's my target. And my stop loss, well, I'm going to take a reasonable spot. It's not 1-to-1. It's not 2-to-1. In this particular case, see how this, you can look back and see almost a resistance level right here. Well, I'm going to get a little bit below that. So in this case, we have about a roughly 9-point target, 10 to 11-point target, and a 20-point stop. So we're inverted 2-to-1. So now I told you that to tell you this. I am looking, let's say this market comes right. We are now in this location. Let me get those labels off of there so we can see it. Okay, so we are now, always shows stats. Okay, I just circled. We're going to pretend now that our market pushed up right here, and we're waiting for it to come into our zone area. We're waiting for that location. However, guess what? If we look at the bottom right here, we have ADX, which is the strength of the direction, in the red is overtaking the green. So we have more shorts, more downward pressure than the green. And ADX is down. ADX is like pretty much the volatility marker of the market. That's really cool. But now on this side, we see, oh boy, we see some green. It's not too strong though. So let's look at our market, and we can continue on with our position. And then we wait, and we wait, and we wait. Let's go over to where we actually made the trade and see what it looked like. Well, guess what we have? Here's where our entry was. So we're looking at the market roughly before it. We're watching it right here going, I ain't doing anything. ADX is way down. The greens and reds, buyers and sellers are crisscrossing. This is crap. Guess what happened? Right here, 5 minutes before 3 o'clock. We see it. The greens shot up, overtook it. ADX curled up and said, dang it, the greens did not only take over the longs, they took over with strength. Okay. So what does that mean? I'm going to let this trade go. And what did we get? Push right up, blew right through it. Entered, pull back, entered right through it. And entry was at 1450, and the target was 1453. So right around my average trade is around 3.5 minutes. There was exactly 3.5 minutes.
Okay. Very good.
So you're just going to put them on for the most part. And see the question there about, make sure I get it fully answered. The short version for Billy is, yep, when you find it, when you plot it out, the trade stays there until we have one of two things happen. Let's pretend the point of control was at that level. Guess what? Trade comes off. Rule, don't change it. We're not going to trade around the point of control. If we're sitting there watching it, bang, 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 and we look, and all of a sudden there's more volatility, more price action there, point of control jumps up to that level, out, just close the trade. It's not worth it. It's not worth it.
When you say just let the trade go, do you mean put it on?
Mm-hmm.
Okay.
Yep.
There we go.
And it's the market. Yeah, if the market opens, oh, it's not going to open. I'm sorry. We can put it. We can put the trade on, and this case would be exactly. Well, can I put it on here? I'll do it as a limit buy.
I don't think it's going to
No,
let
we
you
can't.
submit an
Market's
order
closed.
now.
The market's closed now. Right.
So we got 2 more questions here. Does the ADX take into account volume or just price? And then one more, can you show the settings for the indicator that you have there?
Absolutely show the settings. So on Topstep X, it's called DMI. I'll actually search for it. If I go to indicators, it's called directional movement. So show you what that is. Okay, and in short, it's called DMI. And here are the settings. The length is 10, and I'm smoothing as 20. Smoothing just, and you can change. If I make this 10, you'll see what happens. The ADX smoothing, you'll see it gets all choppy. It's like, I don't like that. But if I make it too slow, I'm not going to get the reaction I'm looking for. So whenever there is a smoothing, and I'll tell you this with everyone in every strategy and every indicator, if there's a setting and then there's a smoothing to it, I always use twice what the setting is. So in other words, if my DI length is 20, my smoothing would be 40. It just helps wean it out. And the style is just, I simply have greens and reds. I have them set differently. So I can see that this one here is on the bars, the columns, so I can see it behind it. And this one is on the area chart. And I have it faded a little bit. I have it down because if I move this all the way over to 100%, you can't see the green. I want to see if the longs are beginning to start building or not. It works out pretty good.
Awesome.
Right.
Thank you for that, Coach Robert. Again, very interesting strategy. I like it again because you're looking for quick moves in the market. And it's not to say that you're just jumping in and out of trades, right? Because the market's moving. There's a very clearly defined criteria for why you're getting into the trades and going from there. I'm going to switch it back to my charts for a second, unless Coach Robert, there's something else that you have there. I think you just switched over to another chart. Something else you want to show there?
I'll show this real quick, Jay, because we can come
Okay.
back to it as well.
Yep.
This here is TradingView. I just loaded my own, and this is something that I built and that will be built in Topstep X, and we can put custom indicators in there because this is how you build it. And if
Very
you
nice.
notice, it's showing us where things are. So it actually plots it out for us. See this here? Where I said it wasn't with gusto? Here's a very, very small, we don't have a really good range in here. There's our correct pivots on a range chart. It plotted this zone out for us right here. But we are not going to take that one because our ADX at the time was down. I should be able to turn that on, my ADX at the top. ADX I changed the candle colors instead. It should be on the top. Oh, I know why. I took it off the top up here because if I turn it on, it's going to start doing a bunch of branding I didn't want to put out here. So I had to right at the top right hand side, just so to be clear, is it tells you what the ADX is. So instead of looking at the chart down the bottom,
You just need to know the value.
Exactly. I have it pre-coded up here. Okay. So
Gotcha.
I'll look at this. I'm like, hold on a second. This market's consolidating. I look up here. My ADX tells me it's low. It's red. It's not doing anything. So I may not take this trade. May not. We don't know.
Gotcha.
Okay. I'd have to go back and look at it. So ironically, this would have been a losing trade. We say could have been, would have been, should have been, but this is just the reality of it. I'm just showing you exactly what the trades would be taken. This one, here it is. This is the loser. We have one trade. This is a really cool example, Jay, because we have a pivot on one side. It detected it. And here, this is the creation. Okay. So we're going to have a long buy stop waiting.
So it's much higher than the high of that pivot.
Exactly. In this case, why? Because look where the other pivots are. It's way down. Okay, so it's going to not only be larger. So we're taking different pivots and we have a larger spot. Notice this one here is a smaller pivot and this is a smaller zone. So in this instance, and I'll blow this up and then we'll pass it off. We're going to enter a buy stop at this level with a target here. However, the market came down, came up, came down, and it said, hang on, we have a couple more zigzags here. You have to put another buy stop here with a target here. So, and then a third one showed up with a buy stop here, which was a loser. We have to talk about the losers. This market, how it would look was, market is pushing our direction. We are one long. We are two long. A little further, we take our first long target out. A little further, we take our second long target out. So we are now null. And then we enter long again. and we lost that trade.
Gotcha. Okay,
When
so
it loses,
two winners and a
it
loser.
turns blue. So we know that this zone down here, see this blue zone right here? When we have a losing trade, it turns blue. It's green if it's green if it's pending long. It's red if it's pending short. It's blue if it hit it but didn't go through it, and it turns gray if it clears it. So what would happen in this case right there, Jay, is let me remove drawings. What would happen in this case? Exactly, we would have our entry of 1, entry of 2, exit of 1, exit of 2, entry of 1, loser. This be blue, which means a re-entry. We finally won it. This is a loser first time around. It entered, it pulled back, loser. But then we have it blue,
Second
we
time
re-enter.
Got you.
Loser on this one too, winner on this one, winner on that one, winner on that one, winner on this one, winner on that one. So in this case, we have what? 1, 2, 3, 4, 5, 6, 7, 8. We have 9 trades. We won 6 out of the 9, which is exactly what the percentage should be.
There you go.
Okay. Does this work in other markets?
Yes, sir.
All right.
You have to make a little bit of adjustments on the time because it's the thing because this happens to be a 40 range chart on NQ. There's no way a 40 range chart looks good on ES. It's terrible. I mean, this is the entire day today.
Right. Yeah. You got to adjust for the market you're trading.
Exactly. Put it on an 8 range chart, and it looks a hell of a lot different. And they have to change our settings because we're targeting different. But you can clearly see, in my opinion, we have a couple losers right here. We have a winner in this section. We have a winner in this section. We have pending. 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 We have a winner in this section. We have a loser on this one, and then we have a secondary winner. So 1, 2, 3, 4, 5, 6 trades. We lost 2, and we have about 7 shorts pending, just as an eyeball.
Gotcha.
Back to you, Coach Jay.
Awesome stuff, Coach Robert. Thank you. Thank you for sharing that. The chat. So we got a couple, comments in here. Just, I love watching others talk about how they trade. It's much different, but it shows you that, there are a bunch of different ways to approach these markets. And got another comment that says, I would love a complete dissertation on this. And Coach Robert could definitely give one. He mentioned the risk reward.
We will.
It is inverted on where the orders are set, but more often than not, you're not letting those full orders get hit. But let's go back to my charts here. I got nothing else on the equities, really. We talked about, the upside. The one trade we took in the house account when I was on with Dolby and Doom was a retest of this anchored VWAP from the New York session. We got stopped out, trailing just a little bit too tight. We should have went under that 942 that Coach Robert just mentioned, and we would have stayed in the trade. But beautiful trend to the upside. Coach Paul, any other markets we want to go to from here?
Corn.
There we go. From the fastest market in the world to
Go for it, Jay.
But corn was a beautiful trade today. It really was. I called it. I mentioned it during fast markets, where I saw some buying coming in early. I don't know how many traders we have trade corn, but I got a corn chart up here, Coach. You've been talking about this one since the year started. And again, here we go, chat. 2 completely different trading styles, 2 completely different markets. Coach Paul, what are you looking at on this corn chart?
Well, we're to state the obvious, running a bull market.
Yep.
But I'm a little different. I only take one side, for the viewers to know that. But this is I like trend trading. This is a powerful trend. Beginning of the year, we literally, I think it was December 30th, we crossed the 200 moving average, and we have done nothing but rally from there.
Yep.
Look on a day time frame, on a half hour, we can see every dip is being bought, which is the signature. We got to the white line last night.
What's that white line, Coach?
The 200 bar moving average.
Did it again.
Did it again. Gave you really leaning. I like to lean on orders. What that means is kind of what was Coach Robert saying, when he sees a pivot, he's a place to lean on where he doesn't have to take too much risk. But I liked extension trades. So when was it? Last night we had the break. We were settled under the 200. And this morning, I think it was 6 in the morning.
Let's see here. Take some of these drawings off. 6 in the morning, your time, which was 7 a.m. Eastern time, right about here. We
Well,
get
so
that.
it was in London where they started buying corn.
Yep, they. Our friends in London, they win
Our
again.
friends. So, with buying it above the 200, putting in 2 ATR stop,
You're way out of the
going
way.
with the trend, it's a good place to lean. Now, corn, I had the pleasure of on Discord of having a class with Coach Jack.
Yep.
And we looked at the average true range, or the average range. Let's not confuse things with the true. In the corn, the average range on a daily chart is 8 cents.
Okay.
8 cents equals $400
For the day.
for the day.
Okay.
The mini NASDAQ is 7,000. And why I bring that up, if you are struggling with volatility or you are a new trader and you're just trying to hone your skills with staying alive, the corn is a place where you can do that.
Yep.
You
Not
can
an
put,
account blower unless you're putting on 10 contracts.
if you're putting on 10 contracts and your budget, my aunt used to say it's got a champagne taste with a 6-pack budget. You got to budget your risk. I can't say that position. It's also called position sizing, but here you can position size. You can do 2 lots if you like, and look for a runner. But the volatility is coming back into corn. It's directional. It's giving great opportunities to buy. And what's that, Coach? Was that the opening 3 minutes?
That is the opening 3 minutes. You guys know I look at volume all the time. Some of those power trades that I've called out using Quantower, just looking at some of the order flow, there was a ton of buying in this opening candle here. We could see we respected 50% of it. If this was a NASDAQ chart, we'd be talking about this being some of the best trade location on the day, where we have a ton of volume coming in. It holds that 50% of it and just off to the races from there. Again, technical
Coach,
patterns work anywhere. Work anywhere. Go ahead, Coach.
yes, they do, because they measure flow. And so,
Yep.
that ADX, I used to use that years ago, and it also measures what? Flow, pressure of buyers versus sellers, leads to an imbalance. If you can define that and find a place to get in where that imbalance has been, been captured.
Yep.
Because losers move a market. So, because they have to move. Winner doesn't have to make a decision.
Just sit
But
there, collect my money.
in this situation, why we talk about volatility or ability to trade without worrying about blowing up the account. On a one lot, if you just bought that opening or bought that half an hour, 50%, and just simply say, okay, if it's good, it's not going to break out of the opening range to the downside. And we put a stop at lows. What is that value?
That is about one full ATR, 6 cents. Is that right? I don't know how to quote corn prices, Coach.
Oh, it's 6 days. It's $75.
$75. Okay, there you go.
So ticks a quarter for every penny. It's a quarter.
Got you.
So 4 ticks equals a penny. That's $50. Can you do 2?
We can afford that.
So, and we're looking 2-to-1 trades. So $75.
You got 2-to-1 right here.
Risk. We got 2-to-1. We've paid for the trade, and this without. I mean, with corn, you don't. It's not
The anxiety is not there.
the anxiety, and you can trade with confidence. Let me ask you, with NASDAQ traders, when you put on a trade, what is your anxiety level? It kind of matches the
It
market
varies.
you're in, right? It varies, but there's always there's always this chance of destruction. Here, this was a clean trade. It's in a well-defined trend. Whether it's corn, it could be treasury bonds,
Yep.
it could be gold. We've gone through all these markets. It was clear to find that this buying is staying in the trend. We have urgency, and that was and corn has been doing this. What does that mean? If it didn't work, I lose $75 or $150.
Right.
To
Find
create
another trade
market,
from there.
and there's volume. Corn has volume. And you don't have the malignant algos that's trying to
A
trying
lot
to
less
knock you
speculation in
out.
this market, you would say, Coach?
Yes. It's a commercial market.
Right.
End users and producers dominate the market, and it's less prone to wild swings. So,
Coach Robert, you ever
um,
trade corn?
I have not traded corn, and I was just marking it up to after we were done. I was saying, how does this process work on corn? And
yeah,
I was
it's
wondering the same thing.
interesting.
I do see. So I pulled up a 100 tick chart. I'm not sure which one we would use here. We actually have a question about that. We had a question from, I believe it was from Kevin. The other day you were using a 500 tick chart. Today you're on a 1,000 tick chart in the Nasdaq. Which one is your go-to, I guess, and you know when do you decide to use one over the other if you're using tick charts? And I'll switch over to you right here.
Yep, sounds good. Since we're using tick charts, it's really just a matter of trial and error to begin with until you can figure out the instrument. Meaning, I'm going to take this one. This is corn right here, and I'm just going to toggle. Let's put on a 100 tick chart, and I don't know. Does that it doesn't make sense? I mean, how can you read a 100 tick chart, right? So all right, let's go to the other extreme. Let's put a 5,000 tick chart on there. Oh look, a 5,000 tick chart. 1, 2, 3, 4, 5, 6. I have 11 days on one screen. Well, that's too much. It's too much movement required to happen. So I just kind of clicked through them, and the irony is I was already on the 1,000 tick chart, so that's the one I used, and it showed the last 2 days. So that seemed like a pretty good one to stick around with.
Okay.
And that's all I do is I picked the highs and lows and just did my math out of it, and ended up being okay. I mean, I don't know the price points at that Coach Paul was talking about, but this went from 6.4 to 7.2 the other direction. So 2 so that's a 6-cent move. That's what it's called, 6 cents, whatever.
yeah, 6 cents. That's
yeah,
That's
and this is all we're looking
$300.
for. There you go. So it's an $800 trade, right? And so we only need 1 to 2 a day with this particular system. We had our second one a little bit later on. Now we had a long pending, but we ended the day, so that long is no longer valid.
Yep.
Exactly, because we're not worried about it. The irony is that if you followed to the next day, it actually did clear it almost like spot on, right? However, when we got back to that area, we have 2 more pivots formed, and those 2 pivots, we're using this one here and this one. And that created this one. And there it is. And then we have the bottom pivot, and this one created this zone, and there it is. So it actually works out pretty well. And we have a pending long up top. Day is done, so we're not even going to be using that anymore. So I was really interested to see what corn looked like.
Yeah,
for sure.
And you're not going to get as many trades, right? The market doesn't, it's not as volatile as the NASDAQ. But, like you said, you might only need one.
Right.
Take a couple
and we're really going to focus on that in the team too. Is taking those trades, because the wider we use our ticks, the more ticks we use, or I'm not going to force everybody, but I'm going to go for the reasons why I don't like time charts. But then anybody can do what they want and they'll do the best with it. So I would suggest, hey, we're not going to be using a 1-minute chart on NQ. I'll guarantee you that it's not going to happen. It's just it's too fast for this particular style. We're going to start off with micros. We're literally going to trade our very first week. Every single trader is going to be trading 1 micro for the entire first week until we get the process down. However they would like to do that process. Time charts, whatever instrument it is, we're going to go through it. And this is kind of how we have to break it down, because I'm going to show what I do and share it. But then after that, you become a coach and say, hey, all right, you're not feeling NQ. You want to do corn? Great. Let's work on it together. Let's figure out what may work the best for that particular instrument, and have at it at that point. And that's just the way it's just going to be a process,
Gotcha.
Piece by piece. So we start nice and easy with it. That's all. But that's corn.
Thank you, Coach Robert. I'm going to switch back over to my charts for now. Any other markets we want to discuss? I know we had some movement in micro Bitcoin. We didn't go over. Oh, actually, hold on. We cannot skip crude oil today. The president said he was going to ask OPEC to lower the prices. So they lowered the prices. Looking at crude oil chart here. I was actually on Slow Markets with Dakota last night and talking about, getting into a short in crude somewhere up near 76. I think we got to 76 exactly at the high. Maybe this high is 70. What is the high of this candle here? 76 to the tick. Take the trades you call out. Here we go. We got the markets selling off. We're under that 200 moving average on the 30-minute chart, Coach Paul, and we've been talking about, since crude hit that $80 level on the December contract, it's been a sell-off since then. I did mention yesterday that, we did have 5 down days in a row, and what's the possibility that we have a 6th when the president asks OPEC to lower prices? That leads to a 6th down day in a row. So we're getting ready to test that 20 moving average. That's around right under 74, right around 73.90. But crude looks heavy. Crude looks very heavy. We talked about this a little bit yesterday, maybe not selling it in the hole here, because the pattern that we've seen is a little bit of a pull up into the London session, and then we start to sell off through New York. So it's exactly what we got today. Any pull ups right now, and of course, patterns are patterns until they break. Any pull ups above this 50 moving average are opportunities to sell. It's what we got at 76. And again, I think it's really important to lean on technicals. No one knew, maybe besides Trump and whoever else wrote whatever he said to the group at the World Economic Forum, no one knew what he was going to say. But before that speech, we talked about potentially selling any pull-ups above that 50 moving average on the 30-minute, right? A sell at 76, you're already in the trade before this happens. Now, once this happens, and we talked a little bit about this as well, that when we get some of these headlines, how do we trade? You guys know how I trade news all the time, right? It's whether it's planned news, unplanned news, volume is going to trade through the markets, right? And that's going to give us price action. So for me, it's okay. Since that volume traded, how does the market respond? This could be an FOMC candle. This could be a CPI rate decision. This could be jobless claims, whatever it is. I want to know the high and the low of that candle, and then we'll attach VWAP to it since that's the highest volume of the day. How has the market responded since we traded that? We can see we get a pull up perfectly to 50% of this candle. We can trade the aftermath. Now, I think what's pretty dangerous is if you're not in a position, you see the market start to move. And this is why I really like 3-minute charts, because it slows you down a little bit. Coach Robert just said, 1-minute charts. If I see a 1-minute reaction or a 30-second chart, I might try to jump in and react right away. And you might have a trade strategy that works for it. But for me, it's like slow yourself down a little bit, allow the markets to, respond, and then I can get in afterwards. Here's a beautiful trade and something that we talk about all the time, right off of that 50%. Now, did I take it? No, it's almost, a full dollar move down in crude oil. But when some of these unplanned news events happen, they're actually some of the best trades that we can see in the session, where they're going to present some pretty quick price action to you. You don't have to sit in a trade for a long time. Anytime I hear, if I'm watching Topstep TV and Andre says, "Oh, gold is popping, crude is popping," I'll switch over and do exactly what I just did here. If it's popping, there's volume coming in. I'm going to frame out the candle where the volume came in and then see how the market responded around there. And it gives you a great opportunity, potentially in a market that you weren't looking at. right? This could be anything. But hey, it's moving for a reason. Is there potential for me to take quick opportunities based on a planned setup in that market? Nat gas, we had nat gas today as well. That was not in our top percentage movers on the day, just outside of the top
What?
4.
It
Didn't
was
do it. It
not?
didn't do it today. It was number 4 today. But here is very similar thing in nat gas, right? Natural gas inventories came out today. That was a planned news event, and we've talked about this as well, right? We have planned news event. You frame out the high and the low of the candle. VWAP is a flat line. We don't know that the market is going to do this, right? But in that 3-minute candle, we attach VWAP to it. We let the next 3-minute candle print. What happens? VWAP is a flat line. The market's rejecting at the highs of that print. This is a potential range bound trade. Now, where would your targets be on this trade? For me, first target conservatively is going to be 50% of the candle. You can trade down to the low of it. And now this is extra here, right? You could be out of this trade. Here's a, almost a 1% trade in nat gas, almost 1.5% trading in this candle, but allowing this print to happen first before we try to figure out exactly what, the market is doing, right? Give it some time, let the dust settle. And this is a beautiful opportunity. We see this all the time. If you don't catch this, do we try to short it in the hole? We talk about it all the time. Perfect retest of VWAP into that range. It's rejecting again. These are really beautiful trades. I did take part in this nat gas short off of this VWAP here. Caught a little bit of the move. I was actually holding it. And it's funny. I took this trade, and in my mind, I said, nat gas is always in the top percentage movers for the day. I want to hold this. And it didn't get it. It didn't get there, but it looked like a pretty good opportunity. Right around this test of VWAP was right around settlement. So at this point, it was flat on the day. The news looked negative, so I'm like, okay, there's some potential downside just based on what the market has been showing us. But of course, today it didn't want to do it. But anything on the energy markets? Either Coach Robert, I think I see you pulling up another chart over there, so we can switch over to you. But Coach Paul, anything on the energies?
Interesting that crude went to that 20-day moving average. It's still rising. This could be a support level. I guess the Saudis got the call.
Yep.
Maybe Mohammed could tell us if they got the call there to sell. But there is support here. I think tomorrow being a Friday, it could be a very interesting day. I would, it might even be a buy bouncing in. It's in the hole, bouncing off the 20-day moving average. Boy, that call I think was made last week. But with that 20-day moving average, is this value, or if it settles below it tomorrow,
bye.
Well, or sell.
I meant this bye. Like we're waving goodbye.
Oh, that
one. Coach Robert, I see you got a chart up. We are at time, but that's okay. We'll go a little bit longer. That's fine. We had a guest. And I do want to end before 4:30 because we got Coach Hoop in Discord. But I see you got another chart up there, Coach Robert, a crude oil chart. Let's just look at your strategy either through crude or nat gas, whichever chart you have up.
Yeah, I was looking at the crude oil one, and I kind of wanted to show this thing that was on. I just switched it back over there on the fly for you there, okay. Coach Jay. It just because I want to show the difference on what these things look like. I was just going to mark a couple areas, not even what the strategy is, but I'm going to mark a consolidation area. Let's see. Let's see what it looks like here. Okay. And then we're going to mark what it looks like on a big push up area like this. All right. Just to have two different areas. Now, this is a NQ 5-minute chart. Okay. So we're going to focus on those two particular areas and see what they look like. Well, what does a 1-minute chart look like? Messy. How do you get this? Is a little tough. It's a little smoother. If you threw an MA or something on there, you probably get away with a nice little push up right there, but you don't know if you run into it. Let's go to a 15-minute chart. What does it look like? Does it give us much information? It's still messy around this time. This is a half hour after the open, so that's what we'll be trading. Not the first 30 minutes. This is after 30 minutes. Okay, from 9 on. Okay. 9 Central, and then we can see this push up, and we might get scared out of these wicks. Now, what does it look like on a 40 range chart? Chop fest. When we talk about barcoding, when we're using a range bar chart, this is what I mean by barcoding.
A lot of overlap there.
Oh my God. There's this, and what range bar charts do, this is a 40 range. That means 40 ticks. And since there are 4 ticks per point, each one of these would be 10
10
points.
points.
So we know that no matter which one of these we look at, every single one of these bars is 10 points, okay? Now the overlap from bottom to top is 10 points, period. So if the market is trading 7, 8, 9, 10, 9, 8, 6, 5, 3, it's not going to plot another candle. It doesn't base on time. Now what you look for when you look at these are stacks. This is a little barcoding thing. You get these right next to each other, down, up, down, up, down, up. I don't know which way it's going to go, but I guarantee you if I was playing this, I'd play the breakout above it or the short down below it because it's barcoding. We don't know where the market is going to go or when or how far or how fast. But what we do know, and I think all the coaches agree, is it's not going to stay in the same place forever.
Right.
So if it's bouncing, this is what you see. And the last piece of this, Coach Jay, is now we look at the push-up. When you see these bars, it's so much easier to see the giant movements when they're happening, dropping down and dropping up. So our first time frame, if we go from the black bar here to here, this is 17. From this location, that's 17 minutes. Okay. Where do we go the next one? 34 to 35. That's an hour. So this is 17 minutes. This is an hour. See how it takes time out of the equation?
Is that a minute? Because okay.
12:38 Central to 13:38, 35 Central.
Okay.
So this is 1 hour of time. Okay. So we can see this. Now, what are we doing? Well, we're going to hold this. This just meant that we had a big drop down with conviction because we had all these black bars stacked up, and it took 17, 18 minutes to get down there. Then what did we do? What I just say, we consolidated 4 or 5 bars right in a row. Well, I'm going to go short if it falls down below, or I'm going to go long if it breaks above. And guess what? It never broke any of the lows all the way up. You just hold it. And how big was this move? If we took it, let's say we got in late and got out early. We got in late, and instead of the top, we got out early. 34 points.
Beautiful trade. One direction.
This
very
is what
clean
they
price action
exactly.
Very nice.
Well,
okay.
My only comment is that confirms what I preach, and I'm saying if you have a process, the beauty of futures is it covers all asset classes. You can go from one to the next and use your process after you understand the financials in each one of those contracts and find opportunity.
Right.
And boy, that just proved it. That was awesome. Thank you, Coach Robert.
Isn't that great? So you guys gonna sign off. I'll sign up to the end. While you're doing that and talking, I'm gonna put a couple links if you don't mind. I have a link to a shared publicly Google Drive, a bunch of tools in there. You can have them free access. Go for it. And we'll share the Discord link in there. So go ahead and do that. And I'll post it in the chat if you don't mind, Jay.
Awesome. Sounds good. So we do have some news out tonight out in Japan, Bank of Japan rate decision. We know how much of a big effect that had on July 11th of 2024 when we had a rate decision then. So be on the lookout for that, especially if you're trading the Nikkei or the Japanese yen or anything like that. Coach, anything you have before we go, Coach Paul?
No, just a thank you to Coach Robert. And trade your plan and plan your trade. It's just universal. You saw that process with Coach Robert, Coach Jay, and myself. We're all a little different, but there is a process, and follow the process. And at the end of the day, develop your own.
100%.
I mean, you could combine the 3 of these and find something that works.
You know what the best feeling is? When I follow my process. Today, for example, right, in that power hour, we took a long trade before power hour. That trade to me was based on my process, right? I was on with Dolby. We called out a long. Then I see Coach Dakota in the chat saying he got long. He's looking at something completely different for me, but his process told him to buy also. Then I see Coach Robert saying, hey, if we stay above the 42 level, 942 in the NASDAQ, I like the long. When you have your own way of looking at the market and then it aligns with other people that you respect their opinion as well, it's the best feeling in the world, right? Because you got in for your own reasons, but then traders that you respect are looking at the markets the same way. and we get a 100-point move in a half an hour in the NASDAQ or whatever that was. So identify how you look at the market specifically. Why I really love having other traders on is because the goal should not be to trade like Coach Robert, should not be to trade like Coach Paul or like me. It should be, hey, how can I be as proficient as they are in explaining my trade process? Because if I am, then it's a lot easier to follow it. I got nothing else. Trade well, manage your risk, Coach Robert. Anything before we go?
I agree with everything you just said. Trade your process. We just showed right at the end of the day. We all put it in writing before it happened. The trades we were taking, the direction we were going, and we were holding it to. Jay's different than me, who's different than Coach Dakota's who's different, and they all played out exactly the same way. That's what we'd love to see. Trade your way, your style. I'm going to show when we get to VIP what I do, how I do it, give you all the tools you need, and then set you free and say, hey, what are you going to do? Some may want to hold longer. Some want to have a different instrument. That's totally fine. We'll go from there. But Jay, thank you very much again for having me on. Now we have one more to go. I'm here on next Thursday, and then we start the VIP stuff. And Coach Paul, always a pleasure to hear what you're doing as well. And thanks for throwing the corn out there. It made me look at it.
All right. Good stuff, guys.
That's awesome.
Thank you, everyone, for joining. Hit that like button if you haven't done so already on the way out, and we will see you all tomorrow. Bye.
Bye.